What's going on, people? It's GBP baby, GBP baby, and well, it's finally happened. I think we should we need to give ourselves a round of applause. We can see that GBP's finally broke down and started to look for lower prices after an intense, very intense move upwards. We're finally seeing a break in market structure and a run towards sell stops. The reason for this such a big movement down and why we didn't see it coming was because GBP baby forgot to look at intermarket analysis. So I am going to actually just make it clear what's going on, and I'm going to clear my drawings. So let's take a look. As we can see, since this point here, bear with me. Right, yeah, so since this point here, we can see that Euro started moving lower, started making lower lows. And at this point for pound continued to make higher highs, literally ignoring what Euro was doing. Whilst dollar was also showing support for higher prices. So we can see that Euro and dollar were in sync, as dollar failed to make a lower low and Euro failed to make a higher high. However, GBP didn't care and continued to move higher, which is why we saw GBP today having to catch up very aggressively and move lower accordingly in order to get back in sync. This is known as the Six Sister. ICT also has a video on that, a recent video actually explaining that concept. We can also see it here. We should have noticed this earlier, to be honest, but hey ho. So we moved this swing high here from here to here. We can see that on Euro that was not the case. We actually moved lower, and on dollar we can see that dollar moved higher. So we can see that Euro and dollar are there holding hands, doing what they need to do and working together to, they're actually the ones in sync, whereas pound clearly was off, which is why we saw pound having to catch up so aggressively today. But it was a matter of time. We were anticipating it, and I was waiting for, I'd say, the past 2 weeks now for dollar to break through into higher highs. So it's nice to see this finally happen. That's why, again, I'm going to give them a round of applause. It's happening. And the British economy is about to start falling, but that's how it goes sometimes. So with this in mind, we can now start to look at what we want to look for moving forward. So I have my eyes on this south side liquidity resting here. This south side, yeah, so I have my eyes on this south side resting here. Obviously we traded through this fair value gap. This is the most recent fair value gap we've traded through on the daily, and we had a break in market structure here. So realistically, this bullish fair value gap is now bearish, so I want to see this act as resistance to continue into lower prices. I'm going to make that red. I'm also going to mark out the 50% level. You know how we do it. And also I want to say hello to all my new subscribers. I've been getting new subscribers like every day, so hello, welcome. This is GBP Bailey, where we constantly call the market, except for this time. Right, so let's mark that out like so, and we'll drop down to the 4 hours, see what we can see. So we also have a fair value gap here on the 4 hour, so I'm going to mark that. Obviously this is what you'd call well, obviously this daily one is the parent fair value gap, and then you got this one within for more precise for more precision really at the end of the day. So I'm going to mark that out, and I am going to actually, let's make that orange, and I'm going to type it out so it's a lot more clear for you guys. This is daily FVG, I want it to be at the top on the right, and this is the 4-hour FVG. Let's just bring these closer to home, and this midpoint we want to stretch this out, and I'll make it a little bit thicker, so it's a little bit there. So basically what me marking this out is me saying, okay, price is allowed to trade back up and retrace, but this is as far as I want it to go. Any higher and I'll be very confused. Like, price shouldn't trade above this, which is also allowing us to create our entries. For example, tomorrow if we trade higher first into this fair value gap, we know that we want to be entering sales above opening price and within this area here, and then this should act as strong resistance, because again this was a bullish fair value gap, became a bearish fair value gap, so now it should continue to act as a bearish fair value gap, assuming we are looking for lower lows, which I believe we are. That should make complete sense. What was I going to mark out next? We had obviously these lows here, so there's a lot of liquidity resting below, which is why I've got such a strong bias in going for lower prices. This is just delineating the clear break in market structure. This is what we want to see when we go bearish, because until this happened we were bullish, but obviously this happened, therefore making us bearish. There's an entry on the fair value gap here which could have been entered today. There, that would be considered an entry on the hourly, but yeah, I wanted to show you the Sunday opening, so bear with me while I get those markings up. Right, so the purple lines I've delineated here are all Sunday openings as of the 9th of April. So these are all marking the Sunday opening prices, and you can see the way that price treats them. In recent videos by ICT, you can go to his channel. He's got videos on the new week opening gap. He uses the S&P 500 because there's an actual gap in the market. However, the same can be applied with Forex if you just apply it to the opening prices, which is what I've done here. So this is, you can see the way that price treats these levels. For example, here and here, we can see how price treated this Sunday opening on the 30th of April as support. It consolidated around this level and then used this as resistance this week, traded above it during the CPI and used it as resistance again before breaking lower through this level. So where the next level I'd be looking at will be this level, which happens to be in line with my sell side liquidity. So it's the way that the market fluctuates between these levels, which is very interesting, and I recommend you guys to go look at it yourself, because it helps build a framework of where price is likely to draw to when it comes to framing liquidity and likely draws. ICT also mentions the importance of the 50% level between Sunday opening prices, for example here to here. We can see the 50% level, we actually traded to that today and we've consolidated at it, which shows how relevant this price level is and how price refers to these levels. So yeah, it's quite interesting. So overall, my next expectation is for a price to draw down into these levels here. Whether we just come to this Sunday level and use it as resistance, I'm not sure, or whether we actually go and take out the sell side straight away. We'll see when we get there. I wouldn't be surprised if price came down here and started to retrace off it and then come for it next week, but we'll see tomorrow. But yeah, overall I'm bearish obviously and like I said, I want to see the highs of tomorrow be made within this range here, preferably below this 50% level I've got marked out, and then for price to start drawing lower into this Sunday opening and this sell side liquidity. We are going to look at dollar very quickly. I'm going to make it a habit for us to look at that dollar now, because you can see what happens. We miss out on beautiful news like this when we forget to do intermarket analysis. We'll start with the daily, and we can see dollar has finally broke these swing highs aggressively too. On the 4 hour I've marked out some levels. So we traded through this fair value gap. We can see that we're just trading around that now. This was a bearish fair value gap, it's now a bullish fair value gap, so this should then act as support for higher prices. I don't really want to see price trade below it. There is a gap here and you can see we have wicked through it, but we'll see how price treats that. So DXY. I'm going to mark that as that's the lowest I'd want to see price go before moving higher with dollar. Got this buy side here, target, and then we have this massive volume imbalance resting over here, which I can see price being pulled to. It's best to look at it like a magnet. You know, you can see price is broken higher here, break of structure, and then after this, price has clearly just been getting dragged up towards the south towards this buy side liquidity and towards this volume imbalance, which should be getting filled pretty soon. So yeah, that's pretty much all from me. This has been GBP baby, and I'll catch you in the next one. Peace.